Hello everyone. A couple of months ago, I had shared my first opinion video on Indiabulls housing finance. It was a relatively short video, and I had given a few strong reasons why I think Indiabulls housing finance makes an excellent investment bet. Okay, so at that point, the share price was around 220 levels, and over the last 2 weeks, we have seen the share price drop suddenly from 200 levels to 150 levels. Even it dropped to 130 for a brief period. And during this period, last 2 weeks, I've got queries from some people asking me whether I still hold a strong opinion about Indiabulls housing finance as an investment bet. What should we do if we have already purchased, or if we are thinking of purchasing more? Okay, so I decided to offer a detailed view of Indiabulls housing finance and how it is I think it's on the verge of another transformation in its business cycle. Okay, so please do go through all the points that I'm sharing, and please do watch it till the end so that you don't miss out on any important detail. Okay, today the share price is at 156 rupees, and considering this price, I'll be basing my opinion. So first, let's look at the first challenge that Indiabulls Group faced in FY09. So before FY09, Indiabulls Financial Services, as the listed company was called at that point, Indiabulls Financial Services mainly into unsecured lending. So it was mainly into business, offering business loans and personal loans. And in FY09, that is in October 2008, the global meltdown happened, and after that, it suddenly saw a knee-jerk period. Means at that point, Indiabulls Financial Service had to write off a substantial portion of its loan book. Most of it was unsecured, so they lost substantial amounts during that write-off, and that gave the rise to the first transformation that Indiabulls Group went through. So it decided to shift more towards secured lending. Secured lending means offering loans to something where there is an asset backing it. Okay, so home loans. Home loans was the preferred bet. So they decided on shifting the entire business towards housing finance. And over the next 3 years, they expanded their housing finance business to such a scale that they finally decided to reverse merge Indiabulls Financial Services into its subsidiary Indiabulls Housing Finance Limited. So in FY14, the reverse merger happened, and the Indiabulls Housing Finance Limited got listed on the stock exchanges. But if you see the track record from FY10, means after the FY09 debacle, from FY10 till FY19, that was a tremendously strong growth for Indiabulls Housing Finance Limited. Okay, so based on the home loan business, they kept on growing at a fairly strong pace, and the loan book itself was of good quality because it had an asset backing it. So there was very low risk. In general, the housing finance business is a fairly low risk business, and that is the reason why we see the rate of interest is fairly attractive that is offered by most of these companies. Since there is an asset backing it, and that to an appreciating asset backing the loan, generally the risk of delinquencies or large scale NPAs is very low. Even if there are NPAs, they can take over the property, and they can auction it off to recover most of their loan book. Okay, so there is very limited risk in a housing finance or in a home loan business. So this FY10 to FY19 was an excellent period for Indiabulls Housing Finance. Then in FY19, what happened was the IL&FS fraud came to light in September 2018. So after that, suddenly there was a knee-jerk reaction from banks. Most of these banks who were easily lending to these housing finance or other NBFC non-banking finance companies, they suddenly stopped lending to them, and there was a liquidity squeeze faced by all these NBFCs, including Indiabulls Housing Finance. Now this crisis is much smaller to what Indiabulls faced in FY09. That time it had to write off a substantial portion of its loan book. Here, nothing like that happened. It was just a liquidity issue, means it couldn't get access to fresh funds so that it could keep expanding its loan book at a fast pace. So it had to kind of pause its lending activities to some extent. And over the last 2 years, if you see, it has been focusing on keeping the asset quality good and shrinking its loan book to reduce the balance sheet pressure, okay, so that it can maintain healthy capital ratios and healthy liquidity situation for itself. So over the last 2 years, Indiabulls has been preparing for the next transformation which it thinks is needed for companies like itself, so that it can ride a strong growth in the coming years. So that transformation is basically moving to an asset light model. So what is an asset light model? Basically, whatever loans they give out, they won't be keeping the entire loan exposure on its own balance sheet. If they keep the entire exposure on its own balance sheet, that means they will have to keep borrowing from the market so that they can expand their loan book. But under the asset light model, what they will do is they will be making use of the co-origination with partner bank facility. Okay, RBI has allowed it over the last year or so, and using this facility, co-origination with some partner bank, it can share the major portion of the loan exposure with the partner bank. Okay, it can focus on the sales part, it can focus on the marketing part, it can focus on the documentation and verification and underwriting part, and it will share most of the exposure with the partner bank so that it needs limited capital of its own. So this will be one portion of the asset light model. The other portion will be wherever it has got 100% exposure to any loan, they can securitize it. Means so generally these home loans or loan against properties are spread over the next 10 years, 20 years period. So in that case, the housing finance company's capital gets locked for that substantial duration, and it continues to get a recurring EMI payment from the customer. So what they do is they securitize, means all these future payments they can securitize and sell it to another bank or a large institutional investor or such funds like that. Okay, so by selling it to some third party, what they do get is they get immediate access to fresh liquidity, which they can again pump in to expand their lending business. Okay, so they will be using these two things, the co-origination part and the securitization part, very aggressively, very actively in the coming years, so that they will continue to add more and more customers, process more and more home loans, and keep expanding the assets under management figure. Okay, the assets under management will be large, but the entire assets under management won't be on its own balance sheet. So that will be a very big advantage of this asset light model. So under this, they will be taking a very small portion of the entire loan book burden on its own balance sheet. Okay. Now let's look at the next slide. So I've already told you the details of the co-origination and the securitization. So in case of co-origination, the partner bank will take 80% of the exposure and 20% will be with Indiabulls Housing Finance. It's a win-win for both because the partner bank doesn't have to do any marketing or sales activity and it still gets a substantial loan exposure. Okay, Indiabulls Housing Finance will take care of the sales part, the verification part, the underwriting part, everything, and the partner bank just has to provide funds. So it's a win-win for both. Indiabulls can use its efficient and aggressive sales and underwriting skills to expand this activity at a much faster pace and with very limited capital required. Okay, even on the securitization front, they can sell down their loans to other third parties after 6 to 12 months of holding period. Okay, RBI allows to sell down after 6 to 12 months of holding period. So in case of loans where Indiabulls Housing Finance has got 100% exposure, that loan portion can be sold to third parties. So they'll be doing that on a regular basis so that it keeps adding more customers, more home loans on its books. The other part of this transformation that they are undergoing right now is the push towards digital mediums. So Indiabulls Housing Finance so far was more reliant on sales through its branches, okay, the entire branch network it has across the country. On the other hand, now onwards it will be focusing more on digital medium, means a customer can apply for a home loan sitting at home, upload all the documents, the verification will be done online, the credit history of the customer will be checked online, and if once all these gets a green signal, the home loan disbursal also will happen online. Okay, so all this, the entire process from application to disbursal, everything will happen online, and this will mean that the efficiency of the entire process will go up like anything, and they can handle much more volumes using this medium. So this digital push will in fact help Indiabulls Housing Finance to get even more aggressive to booking more number of home loans on a monthly basis. Okay, and they'll be relying a lot more on the data analytics. Now what this data analytics possibilities are. So basically, if you see they can use the data analytics data generated from all these digital transactions happening. They can use it to add more avenues to their growth in the coming years. Maybe at some point they'll start tying up with allied businesses, like for example, some furniture company can provide a package deal to its home loan buyers. Okay, since anybody buying a home loan for a new home, they will need furniture. So Indiabulls Housing Finance can tie up with such a company to offer a good package to such customers. Or they could offer, they could tie up with an electronics company, so that people buying a home can take a TV or washing machine and fridge and all those electronic goods, air conditioners and electronic goods from the partner of Indiabulls Housing Finance, and there Indiabulls Housing Finance can get some commission or some benefit out of it. So these are all possibilities in the coming years, but the main business will obviously be aggressive sales of its home loans. Now, if you see the last 1 year or 1.5 years, Indiabulls Housing Finance has been shrinking its loan book, and to maintain healthy capital position and capital liquidity position and capital ratios. So the reason was the ILFS saga, but that got the, Indiabulls Housing Finance management into a conservative mode. They started conserving capital that they had, so that it never faces a very tight liquidity position. So that they can repay off their dues on time. And over the last 1 year or 2 years, we have seen that Indiabulls Housing has been repaying all its dues regularly on time. And even this decision to shrink its loan book has helped them in the COVID situation right now. Over the last 6 months, if we saw that some portion of the loan books of all these banks and NBFCs has taken the moratorium benefit that RBI has offered. And after this moratorium ends, there could be some portion, small portion of the loan book of all these companies which could go into NPAs, or they may need restructuring further. So there could be issues for some customers who have faced difficulties on their jobs or business front, so that some of those may not be able to repay on time. So this liquidity position or the healthy capital ratios has in fact helped Indiabulls Housing Finance to be in a strong position even in this situation. Now what happens is, now they are sitting on a fairly decent capital position, and now they raised even more capital so that they can start lending again. Now if you see the last 6 months, there was sudden sharp drop in economic activity. Now as unlock is happening in step-by-step manner, there will be more demand for the demand will start coming back, and during this process Indiabulls Housing Finance is in a position with capitals to start lending again. Okay, so it has recently raised a substantial capital so that it can start lending again, and I'm hoping that it can go back to the growth that it enjoyed till FY18. Now, on the capital raising front, over the last 2-3 weeks, we have seen that Indiabulls Housing Finance raised 600 plus crores via issue of new shares to qualified institutional investors, and the pricing was 196 rupees a share. So, just imagine institutional investors paid 196 rupees for over 3 crore fresh shares of Indiabulls Housing Finance just a week or two ago, and today you are getting it at 156. That means you are getting it at a 20% discount to that price that institutional investors paid. So this was one part of the fundraising. Apart from that, Indiabulls Housing Finance sold most of its remaining stake in the UK based Oak North Bank. Okay, I'll tell briefly about what that investment is. In November 2015, Indiabulls Housing Finance invested around 400 to 450 crores in the Oak North Bank. It was a fairly new business at that point, and Indiabulls Housing Finance got almost 40% stake for its investment of 400 to 450 crores. Now, after 3 years, the bank did so well that after 3 years, in December 2018, Indiabulls Housing Finance sold a small portion of its stake. Okay, it did not sell the entire portion. A small portion of its stake was sold to a global fund, and they got something like almost 775 or 800 crores from that sale. So that means within 3 years, it had recovered all its investment and got another 300 or 350 crores of profit within 3 years. So just imagine that was an excellent investment, and they still had some stake remaining. So that remaining portion of the stake probably has now got sold out in 2 tranches in the month of September, and via this sale, Indiabulls Housing Finance has got another 1200 plus crores from it. So in effect, if you see, the investment was of just 400 or 450 crores, and they got almost 2000 crores from it in within 5 years time. Today it's in October 2020. The investment was done in November 2015. So it's in less than 5 years time, Indiabulls Housing Finance got 5 times of its invested capital. Okay, in 3 different tranches. So some portion was sold in 2018 December, and the remaining portion has got sold out now in September 2020. So that has been a terrific investment, isn't it? All these fundraising will in effect add to the capital buffers that Indiabulls Housing Finance has. Apart from this fundraising, Indiabulls Housing Finance has also taken advantage of RBI's liquidity facilities during the last 6 months, and it has raised quite a substantial capital via fresh loans from banks or issue of new bonds as well. Okay, so all this capital preparation is just to get the company ready to restart its lending business on an aggressive scale, and I'm hoping that over the next 2 years, it may not happen immediately in just 1 or 2 quarters, but over the next 2 years, it will get back to the growth that it was enjoying between FY10 to FY18. Okay, I'm pretty confident it will get back to some very healthy growth figures. Now, if you see the track record, just see from FY14 was the first year when the housing finance company got listed. Means the reverse merger happened into the housing finance company, and it got listed. So from FY14 till FY18, that was a very strong growth in total income. If you see, the total income figure grew from less than 6,000 crores to almost 15,000 crores. That was more than nearly 2.5 times, isn't it? In just 4 years' time. Even the net profit, if you see, from 1500 crores to 3800 crores, it's again on 2.5 times. So both the total income and the net profit were growing in line and fairly at a strong pace. Then in the FY19, the growth slowed down substantially. The reason I've already told you about the IL&FS issue that came up in FY19. So from that point, Indiabulls Housing Finance started shrinking its loan book, and if in FY20, if you see, there has been a degrowth. Okay, degrowth on the total income front, degrowth on the interest cost as well, because of the securitization and all, it has managed to repay some of its reduce the loan burden on its own balance sheet. So in fact, this interest cost will drop even further in this year. And the net profit, if you see, it has almost dropped by 40%. The reason is around 700 crores was allocated for the COVID related extra buffer provisioning. So it would have been 2,900 crores had it not been for that extra buffer provisioning. But still 2,200 crores is still a fairly healthy figure. Now look at the dividend. It's a one strong reason to invest in Indiabulls Housing Finance, the regular dividend flow. Indiabulls Housing Finance has been sharing dividend on a quarterly basis for the last many years. Okay, it's just the last couple of quarters that it has not shared any dividend, and the reasons we know that because of COVID, they are conserving the capital that they have, and they would like to use that capital for business growth. And once the business growth resumes, they will start sharing the dividend again. Okay, the management has already said that they plan to start issuing dividends before the end of FY21. Okay, so maybe we can expect to see the first dividend flow to resume from March quarter onwards. But if you add up all these dividends that they have shared in the last 7 years, this figures 29, 26, if you add up all these things, it comes to 239 rupees a share. So in the last 7 years alone, the 239 rupees dividend flow has come in. Okay, so if we assume that the same figures, kind of near about the same figures are delivered in the next 7 years, you are getting 150% of the current share price just via dividends. Okay, forget about the share price growth. That is a very strong possibility. I'll talk about it in a few minutes. But just focus on the dividend. You will be getting 150% of the current share price only via dividend. Maybe it could be more. If Indiabulls Housing Finance goes back to strong growth figures, the dividends could be higher. But let's assume that the same trajectory is maintained for the next 7 years. Then the same 239 rupees if is delivered via dividends over the next 7 years, then you are getting more than 150% of the current share price only and only via dividends. This is a cash flow that you will be getting. Okay, so your entire investment will be out with 50% profit only via dividends, and whatever share price is available on the price will be completely bonus. Okay, so now look at the valuation. If you see the valuation at current share price of 156 rupees, Indiabulls Housing Finance market cap is at just 7,200 crores. So at this market cap, it is trading at less than 2 times the annual net profit that it had posted in FY19. FY19 was the last year when the growth momentum was there. After FY19, the growth momentum has tapered down. But it can obviously go back to that growth. The reasons I already shared with you in the previous slides. So if Indiabulls Housing Finance is able to recover its growth and go back to its healthy growth figures, the net profit can recover to 4,000 crores level maybe in the next 2 years time. So you're getting a company at a market cap of just 7,200 crores, a company which is in a position or which has the capability to report 4,000 crores of annual net profit maybe in 2 years time. So that's a blind valuation. Means nobody has to think too much to buy Indiabulls Housing Finance at this valuation. Okay, just buy and keep it for 2 to 3 years minimum. 2 to 3 years view is required for this growth story to show its own colors in the coming maybe 2-3 years time. Maybe you can hold it longer. Once you see the growth coming back, you can decide to hold it longer. But if you are buying today, please buy it with a 2 to 3 year view. Okay. Now look at the share price chart between 2013 to 2018. The share price got listed after the reverse merger in July 2013. It was around 250 rupee level at that point. And then based on the strong business growth that we saw, Indiabulls share price went from 250 rupees level to almost 1400 level. So this peak here, near this peak, is around 1400. So it multiplied more than 5 times in less than 5 years. Maybe in around 4 years time, it multiplied 5 times. and this was the reason was the strong growth that Indiabulls Housing Finance was reporting. Now after FY18, what happened? Let's see the next chart. So after FY18, what happened in September 2018? The ILFS saga came to light, and because of that we saw a sharp down move in the share price. So from 1200 1300 rupee levels, the share price started dropping, and over the next year or so it has dropped to less than 200 rupee levels. So today at 156, you are basically getting the same company at much cheaper valuation. You are just paying 10 to 11% of what it was just 2 years back. So it's a very limited risk at this point to invest in Indiabulls. You don't have to take too much of risk. The risk element is so low that you can just buy it and hold it for the next 2 years, and I'm pretty sure that you'll be gaining substantially from it. So if you feel that whatever information I shared was useful and logical, so please do think over it seriously, and you may please share this video with other friends who also are investing in the share market. And if you haven't subscribed to my channel yet, please do so that you can get regular updates in your inbox.